not sure. It's hard to figure it out. This is the first time that I've tried going live on YouTube and TikTok at the same time. And so, what's up, guys? And welcome to the. Normally, this is a podcast, and with a podcast, I go, "What's up? Welcome back. Welcome to the another episode of Behind the Facade." Today, this is a slightly different format, and I'm going to try with the live. So the idea here is a Q&A. If you have any questions on real estate investing, then that's the area that I kind of know best. But I thought I would go along and talk about the pros and cons of stock market, crypto currency market, and real estate market investing, and which one is the one to kind of go for, which one is the one to avoid, if there is. I mean, we'll get into all of that today, so if you have any questions at all, feel free to put them in. The idea of this is, like, I've been investing in real estate for about 25 years. I've been investing in, and over that period of time, I've also invested in crypto. I've invested in stocks. I've done it in different platforms. I've done it in various ways. I've kind of gone into kind of expensive mistakes. I've made some expensive mistakes over the years, but I've also done really well. And so there's a combination of ups and downs that I can kind of talk about. And so really it's down to which one would I choose to invest in going forward. Like, would I choose the stock market over real estate? Would I use crypto? Would I choose crypto over stocks or over real estate? I mean, I suppose the moral of the story is to kind of have a diversification, but there's different pros and cons, and you got to understand your own mindset, and your mindset will dictate which one is most suited to your personality. And if you go and pile into the stock market and you're watching it every minute of the day, kind of moving up and down, stuff like that, it can mess with your head. Whereas if you are if you're able to handle that kind of emotion with the ups and downs and things like that, then it's a little bit different. One of the nice things about real estate is you don't get those instant fluctuations, and you don't get your kind of phone binging away telling you that your property has gone down in value or gone up in value, because that kind of stirs emotions, and sometimes emotions can get you to do silly things. So a lot of people are going to have different opposing views to this. I've already launched a podcast on this topic recently, and already I'm getting some negative feedback from people who didn't agree. Now, the bottom line is, I'm not a crypto expert, but I did talk about my experience in Bitcoin. And so all I can do is talk about Bitcoin. I don't know, I do know there's something like 15,000 crypto coins out there, different types of coins and stuff. And there's just so many of them that who would know every single one of them? It's very difficult to understand all of that. But in the case of real estate, I know a lot about real estate. And in the case of stocks, over the years, I've bought a lot of different stocks and stuff like that. I have a question from someone. Do you need someone to do marketing for you? Not right now, anyway. So in the case of, let's just, when I'm talking about stock market, by the way, there's a generalization there. There's obviously lots of different things. You can be trading commodities, you can be trading all these different things, but I'm talking about just the general sort of stock market. That could mean anything from precious metals to derivatives and all that kind of stuff. But when you're getting into talking about these investments, let's just talk about the pros and cons of each, because there is, let me take this off for a second. The bottom line when you're talking about the pros and cons, let's get into, for example, stocks and crypto. One of the big benefits, but then depending on your mindset, it could be drawback, is liquidity. You can get in and out of crypto. You can get in and out of the stock market really quickly. You can also lose very quickly. You can win very quickly. There is that kind of speed that you can kind of move with. But in the case of the stock market and crypto, you have that is an advantage, the liquidity. If you buy something and you want to sell it, depending on what price you're prepared to accept, you can pretty much get rid of your stock or your crypto in a couple of minutes. With real estate, there is obviously an aspect to real estate that is going to take time. When you're trying to sell or when you're trying to buy, you've got to employ solicitors, you've got to do your due diligence. If you're buying with a mortgage, you obviously have to go through the whole mortgage process. If you're selling the property, you've got to go and appoint agents, you've got to market it for sale, all of that. with the stock market or with the crypto market, obviously you don't have that. So let's just put that down as a point in favor of stocks and crypto. The liquidity piece is good. In the case of stock, one of the negatives now to crypto and stocks is the volatility. Now, depending on your obviously volatility actually allows you to trade and make profits. Like if something is going up and down frequently, if there is that volatility, then that is obviously something that you can trade on. So you can actually make money off of that volatility. But if you don't have, if you're somebody who just wants to buy something and sit in it for the long term, then volatility has some negative side effects to it. And obviously, when you're watching something on your phone and if it's binging telling you like that the price has shot up or shot down, that can be a pro if it's shooting up, and it can be a really negative if it's shooting down. Over the years, I've had a situation where I've been out. I was trading. I was trading on margin in the stock market, and it was called CFDs, contracts for difference. And I would be out for the whole day, very busy with meetings and all that, and then you would come back after a full day of work, and I would turn on the screens for the stock market, and I would find that my portfolio had gone down by sort of 25,000 in a day or something, and you're just staring there like, it just ruins your day, that kind of thing. Now, obviously, if it goes up 25 grand, it's the best thing, but there is that whole volatility thing. You have to understand whether or not your mindset is best suited to that kind of volatility. And some people, people who are into trading and stuff and who can remove their emotions from it, they do extremely well. But if you're a person who is impacted and has anxiety at night, finds it difficult to sleep from these kind of things, that can be problematic. So you do need to be just aware of your own strengths and weaknesses. Some people have great strength for that kind of thing. Other people have strengths in other areas, and they'll do quite badly in that, but they do really well in, say, stock in real estate or something like that. Lawyer Chris, hey, how are you? It's good to see you guys. Thanks for the comments. I'm trying to keep an eye on this. Do I think Cardano is worth buying? Honestly, don't know. I am no crypto expert, and I think quite a few people pointed that out to me after my podcast this week. But I was sort of making clear that I was talking about Bitcoin. I had an opportunity to get into Bitcoin back in 2013 when it was $93 per coin. And I didn't at the time because when I went to go and buy it, it had shot from 93 to 141. And I thought to myself, whoa, it's jumped $50. Like it's jumped basically 50%, more than 50% of its value in 3 days. Like I don't want to buy into something that's shot up that much in 3 days because it could fall that much in another 3 days. So I actually didn't invest at the time. Now, do I regret it? Sure I do. But who knew at the time? And there's been lots of ups and downs over the years. I'm going to be getting into that in this live. Now, some of the pros of the stocks and real estate over crypto, and this is something that people have pointed out that I'm wrong. Okay, so look, I'm going to hold up my hands. I'm no expert in crypto, but one of the things that I did say that I believed is that at least in real estate, you have got rental income, and in the case of stock market, you've got dividend income. With crypto, certainly with Bitcoin, you're not collecting any kind of an income from Bitcoin. Now, I guess there's plenty of coins out there that do offer stuff like this, but for me, I just don't know enough about it, and there's just too much change too frequently. I mean, you hear about these rug pulls and you hear about all these things. There's an awful lot of scams going on out there. So I would only really be ever looking at crypto in the sense that something that's stable and that's been around for a while. Thoughts on whether the first time buyer scheme should be expanded to second-hand properties? That's, politically, I don't think, like most people that they're buying for the first time, I guess the fact is if you're buying for the first time, it could be a second-hand property. So I guess that it would make a lot of sense. Getting back to the kind of the point that I was trying to make about the property market and the stock market. If you're looking at companies in the stock market, or if you're looking at real estate, you have got an intrinsic value. All right. So there's so many bricks, so many blocks. All of this stuff went into making this asset, we'll call it. And in addition to that, it's built on a piece of land that has a value to it. Now, when you're talking about crypto, you don't obviously have an intrinsic value. You've got a market value. Yes, people do value the coin or the Bitcoin or Ethereum, whatever it is. People are putting a value on that, and it can be quite high. But it's a digital code in a computer, and so there's no intrinsic value. Like, you can't take it and use it, and so from that point of view, there's kind of a bit of a disparity there between that. I mean, obviously at the moment, people do value Bitcoin, they do value Ethereum, and whatever other coins that you're looking at. But if there was a market crash, like, what can you do with that? You'll always be able to rent your property. You'll always be able to, if you buy shares in a company like, Apple or something like that, they're making, so many million iPhones, iPads, all of this stuff. They're selling it every single month. That income is coming in. It has a value. That's the bit that you might have a question marks around the intrinsic value in the event that the market was to kind of crash down. Like, if you can buy it below its intrinsic value, then you're doing great. But if it doesn't have an intrinsic value, then what is a good value play when you're buying something? Then the other thing in terms of the benefits, I guess, of real estate over the others is just the ease at which you can use leverage or debt to buy something. Now, obviously, if you're going to be buying a property, whether it's second-hand or whether it's first-hand or whatever, you'll get a mortgage. Now, you might have to jump through a lot of hoops. Banks offer different kind of rates, and they also make you jump through various hoops in terms of whether or not you qualify, what your income is and all that. But there is like an established way of doing that. If you're going to go and buy crypto, or if you're going to go and buy stocks and shares, you need to be a little bit careful about that, because when you're trading on margin, as they call it, you can lose an awful lot of money very, very quickly. I've gone through huge swings when I've done that in the past. Now, huge positive swings, but then they also turn negative, and it can be very, very difficult to find it when it does. You're trying to get out of something that's falling rapidly. It can be quite difficult. At least that's one aspect of the real estate market that I enjoy, is that it doesn't have that volatility. So at least when you're using leverage, you're not looking at those kind of massive swings. Positive is great, negative not so great. The other thing is, one thing is that stocks and crypto have, which obviously is a benefit, is fractional ownership. You can buy a very, very small piece of it. It's not so easy to buy a small piece of real estate. You got to go out there and borrow 50, 100, whatever it is, thousand. One of the pros and cons of stocks and crypto over real estate as well is just the ease of holding it. If you have shares or if you have crypto, obviously there is no holding cost to it, essentially. Whereas with property, you've got maintenance, you've got certain taxes and things like that on it, and you've got to insure your property. There's maintenance, and there's tenancy rights and things like that that limit what you can do with the property. Whereas with stocks and crypto, obviously that is less of a situation. Obviously, anonymity in the case of crypto is a big benefit, but you have to wonder. Certainly in my case, I have no desire to be involved in something on an anonymous basis. Like, it's not important to me, but I guess for some people it may be. Certain parts of the world, obviously, that is something of an issue. One of the most important things insofar as the stock market and the real estate market that is beneficial is the fact that it's regulated. There are certain investor protections there, and with crypto, it is a bit of a wild west out there. I know that's also something of it's often touted as one of the advantages of crypto, that it's not yet regulated, but you have to wonder. There's an awful lot of potential scams out there where you're thinking that you're buying something and in fact you're not. You're getting scammed out of it. And I have been contacted by somebody who was scammed before, and they lost like 80,000 or something like that. So it is something that you have to be wary of. What makes me passionate about real estate? Well, my background is architecture, and so from me, I can actually visualize a real estate or a piece of real estate. I can buy an old property and I can, just by closing my eyes, I can kind of imagine the potential of the property, and that's an advantage that I guess not everybody has. And so for me, it's very easy for me to kind of walk into a place that's really run down, and I can kind of look around and say, well, look at all the potential here. It's not something that everybody can see, because I have worked with clients that honestly just could not have, they had just had no idea what I was talking about when I was making suggestions and stuff. In terms of the performance of the property market versus the stock market versus the crypto market, I've gone into a bit of a background research here just to kind of have a look. Clearly we're in a bull market for the last decade or so. In fact, it's even longer. If you go back, the market started to turn positive probably around 2009, 2010. So it's slightly over a decade now we've been watching the market rise. And there's all sorts of talk about whether we're heading into a bear market now. That remains to be seen. But I'm going to go into the performance over the last 10 years, and I'm just going to compare it with the performance of stocks, crypto, and also real estate. And I think it's going to be quite useful actually to see this. If you look at, for example, house prices in Ireland or the UK, if you look at the house prices in the UK, first of all, 10 years ago, the average house price was £166,000. Today it's £268,000. So it has grown by 1.6 times over that period of time, so 160%. In the case of the Irish house prices, we've actually done slightly better than that. It's the average house price in 2012 was €171,000. Today it's 291. So that's a 1.7x increase, or 170%. Now, if you compare that with, for example, the stock market, if you look at the UK FTSE 100, which is one of the indexes there, that in 2012 was 5871, and today it is 7466. So that is actually only a 1.3x increase over that period of time. So it's not very good. Certainly, house prices have done better than that. So you would prefer to be investing in the house rather than the FTSE. However, when you look at the Irish ISAC, the stock market here in Ireland, it has actually done better than all of those. It's done from January 2012. The price of the ISAC was 3,008, and today it's at 8,162. So it has grown by 2.7x, or 270%. Now, that is actually, compared to the house prices of 1.7x, that's pretty good. But when you see what the stock market in the US has done, and when you see what Bitcoin has done in that period, it does look, pretty poor by comparison. Let's just have a look at the Dow Jones Industrial Average in New York, in the US. That is, since January 2012, that's jumped from 12,952 to 34,725. That is a 2.7x return. So it's the exact same as the ISAC, the Irish exchange. If you're looking at the S&P 500, which is another index in the US, that has actually jumped by 3.2x. So it's doing better. And then the NASDAQ, which is where all of the tech stocks are listed, the NASDAQ is actually up 4.5x. So, decent return, substantially better than housing if you've invested in it and if you just bought the index and nothing else. But let's have a look at Bitcoin. It's incredible what Bitcoin has done. In January 2012, Bitcoin was $3 per Bitcoin. Today, as of the last, when I wrote these slides, which is a couple of days ago, 37,565. So that is a 12,500x return. So absolutely astronomical. It's it is just incredible. And so anyone who's bought at $3 and just sat there diamond hands until today, they have done extraordinarily well, and fair play to them. The only thing I would say though is, in that time frame, you've had periods when you've jumped up and then it's fallen down, and you've jumped right back up and then it's fallen down. It's done that several times, like these big zigzags. And if you've gone through that, you know, unless if you locked your Bitcoin away and didn't look at it, then it wouldn't have any impact on you. But if you're watching it on a daily basis, this would have had a really emotional roller coaster ride for you, because like people had gone from $20,000 and it fell down to $3,000, and then after the $3,000 rate was hit, it went all the way up to 65,000, and now it's at 37,000. So it's all great flying up the way it is, but if you happen to be the person who bought at 65,000, you're currently nearly half of your money is lost already. So you have to be careful when you get in. And if you got in 10 years ago, well then of course you're doing great. So the 10-year performance on the face of it, Bitcoin is the absolute winner. There's no question about it. However, you got to be careful to just factor in a couple of extra things. In that period of time, you have had no income whatsoever from any Bitcoin. Now, obviously, your the value has grown so dramatically, maybe you don't care. But if you're using this as kind of a pension or something like that, then you'd like to be able to live off of your investment, and therefore some income from it would have been beneficial. During that period of time, that 10 years, you would have had income coming from the property that you bought, or from the dividends in the stocks that you bought in those indices. So that is something to kind of bear in mind. The other thing to consider is the leverage. We talked about debt and the fact that you can have mortgages and stuff like that. That is kind of critical to this, because when you're buying a property, typically what you'll do is you'll put down maybe 10-20% cash of your own, and then you'll borrow the balance. So let's just use 25% as a kind of an example. If you put down 25% and you're borrowing 75%, that means that you're actually going to see a gain of 4x on your actual cash. So if your property, using the example I did earlier, the house prices over that 10 years have risen by 1.7x or 170%. But because you've leveraged, because you've borrowed, because you've got mortgage against the property at a rate of about 4-1 or 3-1, you're looking at around a 7x return on your money, and that's the benefit of leverage. And obviously, if you're trading on margin, the contracts for difference that I mentioned earlier, you could potentially have made a 10x return on your, say, the Nasdaq, a 4.5x return. That could actually be a 45 times return. So there are ways to kind of go, but clearly they're nowhere near Bitcoin. So I think Bitcoin, certainly in terms of valuations, has definitely won in the performance stakes over the last 10 years. The question is really, do you have the mindset to deal with that kind of volatility? If you get in early and if you hold for years, then obviously you're going to do really, really well. But I've listed out the swings in Bitcoin just to kind of give you an example. So if you bought in January 2012, by the end of that year, you would have 4x your money. So that was a good year. You did really well. If you bought in January 2013, at the beginning of the year, it was only $13, but it finished the year at $947. So in that 1 year, I think it's the best year on record, you actually had Bitcoin jump 73x in that year. So 2013 was the year to get into Bitcoin. If you'd gotten in, you were up 73x your money. So $1,000 invested in Bitcoin in January 2013 is worth 73,000 at the end of that year. So there's virtually no investment I know that could do that kind of return. However, if you hung on to it, if you had decided after seeing that performance that you want to get in, and you had bought in January 2014, you would have lost 50% of your money during that year. And so that is the kind of volatility that I'm talking about. If you bought property in January 2013, you're probably up double or triple your money, but you could have lost half of your money on Bitcoin. So that volatility has an aspect of negativity to it. 2015, it rose only about 15%, not 15x, 15%. So, barely more than real estate. In 2016, it jumped 73%. So it's starting to kind of show some good returns again. And in 2017, it jumped 10x, which is great. So over the years, it's had these big fluctuations, but if you bought at the wrong time, you could lose half of your money. And so that's an aspect of it that, is it's something just to bear in mind and kind of just make you think. Let's see if I have any questions here. We have got, all right. Yeah, thanks for your questions, because as I mentioned earlier, I don't know anything about some of those crypto coins, so I'm not able to answer on that. In terms of the next thing I was going to talk about was just the outlook for the market. And the outlook for the market, if you're looking at the stock market, it has been a wild January. Like, it was way down for the whole month of January, and then it staged this kind of recovery in the last few days. There's a lot of different viewpoints on where it's going to go. Some people think that there's going to be a crash of kind of like 50 or more percent, a little bit like the 2000. I actually was very sort of closely watching the stock market back in 2000, and the dot-com bubble was, sorry, let me just read this. I'm a complete novice. Would you recommend long-term investment or short-term day trading? It all depends on your personality, and like, if you want to compare people, for example, there are people like Warren Buffett who buy things and hold them long term, and if you hold something long term like that, you're never going to fail. But do you have the mindset for that? Do you want to kind of like get in and get out? Do you want to like take profits? You have to be able to remove all emotion when you're in this kind of situation. If you can remove emotion, then you'll do very well with the short-term trading. But a lot of the time, people are getting in, and then they see a big swing in the market, and they think, oh my God, and they get out. And then all of a sudden, after they're gotten out, the market swings back. So you really have to have a very, very strong sort of mental mindset to be able to deal with those kind of swings. If you get into, rather than trying to time the market, something that I've sort of said before, rather than trying to time the market, time in the market is better. And that's kind of getting to your point. Like, if you bought Bitcoin, for example, in 2012, 10 years ago, you are up 12,500%. You're not 12,500%, 12,500x'd your money. So, you've done incredibly well. However, would you have seen a swing in the price and jumped out of it, and then once you've jumped out, you don't know when to jump back in? So getting in and getting out, I don't know. I certainly don't think that. I think the vast majority of people, it doesn't work. For some people, it does work, but I just think you have to kind of understand your own personality. If you can remove all emotion and you can be really logical and rational about it, then you'll do quite well. But if you're a person who suffers from anxiety, who finds it hard to sleep at night if something has taken a loss. I'll give you an example. Way back in 2005 or 2006 or something like that, I was margin trading in contracts for difference. And contracts for difference allow you to buy 10 times the amount of money that you have. So in my case, I put 100,000 into an account. The 100,000 that was in that account allowed me to borrow up to, yes, CFDs, Jason. 100,000 in that account allowed me to go up to $1 million in investment, and so I was buying really volatile stocks. I was buying gold exploration stocks and oil and gas exploration stocks, and these things have these massive swings in their the way they go. Like, I remember the 100,000 I put in, within 2 months it was up to about 250,000, and when it jumped up to 250,000, I thought, whoa, this is brilliant. I took my original 100,000 investment out, put that away to the side, and I thought, okay, now I have 150 grand free money in the market doing really well. So that 150 of free money went up to 250, and I suddenly started thinking to myself, why did I take the 100 out? If I had left the 100 in, the extra now would have been much, much higher. So I actually took my 100 that I took out and I put it back in. And so I ended up with about 450 of an investment in there, and it grew again. And at the time, the gold was the gold company was jumping through the roof, the oil and gas was jumping through the roof, and in the space of about another month, 2 months, something like that, I can remember the top of the market, my stock portfolio was 850,000, and so I put 100,000 in, and now I'm 850,000, and I think no more than 6-7 months between the 100 going in and having 850 in the account. So sounds great. If I had gone and sold everything that day, it would have been great. But what I got into my mind was that, okay, as soon as it hits 1 million, I'm going to take everything out, and that's going to be me fixed. And I stayed in, and the 850, it never went above 850. It fell, and I remember it was at 750 a day later. And I kind of thought, okay, I'll wait for it to go back to 850, and then I'll get out. I won't get greedy. And instead of going up, it went back down, and it ended up at 675 or something like that. And I thought to myself, God, I'll just wait until it goes back up a bit. And it just kept going down and down and down. And every time it went down, I kept on remembering. Yes, it really is. It's a cringeworthy story. Every time it went down, I kept on regretting not selling it, but thinking that I'll wait till it goes back up to what it was. So it's called chasing your losses. And I was just thinking, okay, it's gone down. Now it's at 550. I'm down 300 from the 850, but I'm still substantially up on the 100 that I put in. So I thought to myself, right, let's just calm down. This is going to go back up. It didn't go back up. It kept going down. And I remember it was my birthday, and I was lying by the pool. I had my kids and everything like that around me. I was having a great birthday, and I get a missed call on my phone, and I look at it, and it is the institution that had my CFD account, and I'd missed the call, so I called them back, and they're there to tell me that it's gone below the 100 grand that I had put in, and I have a margin call, and I need to put 70,000 into the account, or they are going to close out the position. And so to go from 850 all the way down to now, I've not only I'm now below the 100 I put in, and I'm being asked to put in another 70. And at this stage, what do you do? Do you go, okay, yeah, margin call? What do you do? Do you say, okay, close out the position, I'll just walk away from it all? Or do you put in the 70,000 and then hope that it can go all the way back up again? So I put the 70,000 in, and the next day, first of all, it ruined my birthday. I had to go, and I was away in Spain. I had to go and ring my personal assistant, ask her to go and send off an instruction to go and transfer 70,000. It has to be done that day. Yeah, you can't. The account has to be closed out that day, basically. And so I had to make this kind of last minute dash. This is while I'm sitting by the pool, and then I went and just sort of said, okay, pay the 70,000. The next day I get up, have a nice day, number 2 day of the holiday, and by the end of that day I get a phone call from these guys, and I didn't want to answer because I knew it was another margin call, and I was 15,000. Now I had to put in another 15. I put in another 15, and then it kept on going like that, and I ended up getting out of the whole thing, just telling them to sell the whole bloody lot after I was 150,000 down. So I had gone from putting 100 in, going all the way up to 850, going all the way back down to zero, and then another 150 under zero. And then at that point I said, get me out of this market before I lose any more money. And so I got out, and I've just been reading. I actually have the documents from that period, and I didn't actually even get out at 150 negative. I was actually 170 negative, but I told the guys that I had no money to actually pay the 170. I could pay them 3 grand, which every month for a period of time, and they just said, look, we'll take whatever I had, and at the time it was around 150, and so that was it. Get me the hell out of this thing. And so that's what short-term day trading can do to you if you do not have the mindset for it. Now, Jason is watching here, and Jason has the mindset for that. He can, do all of the kind of, the little kind of things like stop losses and all that. I was just a gambler when it came to it. I wasn't a technical expert at all this kind of stuff. I got lucky going up to 850, and then I should have just gotten the hell out. But people think that when they're seeing these kind of incredible shifts in their favor, that there's something that they're doing right, as opposed to just being lucky in the right place at the right time. And so in my case, I paid a hefty price for that. And so personally, I just know that trading, that kind of day trading, does not suit me at all. Jason is saying he blew, yeah, I remember you telling me that, Jason, yeah, blew 40,000 when he started up, just, learning how to trade. And so you can sort of screw up. You just have to be careful. Let's see, there's a question here. Does the same apply to crypto? Can you go into the red? You see, it all depends. Like if you put money into crypto and it's your own money, then that's fine. You can go to zero for sure. But if you put 10,000 into an account and you buy 10,000 worth of crypto, and the crypto goes up to 100,000, you can sell and you've made 100,000. If it goes to zero, you've lost your 10,000. But if you go and trade on margin, which some of these accounts, like I don't know what the kind of margin you'll get on crypto, but you can go in, you put 10,000 into an account, and certain platforms will allow you to leverage up on that. So you put in 10 grand, but they might allow you to buy 50 grand's worth of crypto. So if you do that, you buy 50 grand's worth of crypto. If it doubles in value, you're up to 100,000 now on your 10,000 investment. You can sell it all in the morning and you've made a 90,000 profit. But when it swings in the opposite way, if you put 10,000 in and buy 50,000 of crypto, and if it has a very bad day and it falls by 50%, you're now down at 25 grand. You'll have to put another 15 grand into your account because the 25 is lost. Your original 10 plus you now owe the institution 15,000 as well. So margin trading, when it's going up, it's the best thing in the world. When it's going down, it's the worst thing in the world. And it just kills. I used to come in from the office, as I was saying a little bit earlier, and I'd be very, very busy and turn on the screen, see how much I've lost, and that's it. I'm not able to work for the rest of the day. Let's see, Jason is saying, let's see, where's that comment gone to? The comment has gone and disappeared on me as I'm in the middle of trying to read it. Sorry. Oh yeah, there we are. Best tip for putting investment capital into crypto: always expect the possibility that it may go to zero. In other words, assume the money that you are risking is already gone. And so there you go. That's a good tip from Jason. If you lose 50% of your account, you have to double your account to get back to break even. Yeah. So look, I don't think trading on margin, unless you are an expert and you know what you're doing and you can put in stop losses and all this kind of stuff. But for a lot of people, it's just the mindset aspect of it. It's like, as I was saying, you come in, you turn on the screen, you see how much you've lost. In fact, there's a very famous case over in the US, Robinhood, the trading platform. I think it was some sort of an error message came up on a guy's phone that he owed 750,000. I mean, it was a mistake, and he didn't know it at all. But he was so shocked and so kind of just disappointed and devastated by this, that he threw himself under the next train that came into that station, and all because of the emotional upset that this account had actually told him. And so there you go. I'm glad you enjoyed the story. Thanks very much. Right, guys, we're coming up on 40 minutes, so I'm going to close it out here. But look, I'm going to try and do this weekly now. So if you're interested in learning more, be sure to subscribe to either the YouTube channel or the TikTok account, and hope to see you in the next one. Take care, guys. How do I turn this damn thing off? I have no idea. This is the first time I've ever done a live. Studies have shown, hold on a sec before, studies have shown that human beings can tolerate 10% fluctuations in motion. Yeah, absolutely, Jason. And some people are better than others. I know people that just have no problem at all, but I know others that are just, their emotions are just completely they'll just they'll have to spend a week in bed after experiencing something like that.